For the first time, the United States has moved to outlaw its own digital dollar and to lock that ban in for the rest of the decade. Congressional negotiators folded a statutory ban on a Federal Reserve central bank digital currency into the bipartisan 21st Century Road to Housing Act. The provision blocks any Fed-issued retail digital dollar until December 31, 2030, and the bill now heads back to the Senate floor. A central bank digital currency is government-issued digital money, and to its critics, it raises the fear of state surveillance over how people spend. Supporters of the ban argue that a programmable government dollar threatens financial privacy, and that stablecoins and crypto should fill that role instead. It is a sharp divergence from much of the world, where the EU is building a digital euro and China already runs its ECNY at scale. For now, the world's reserve currency issuer has chosen private digital money over a state-run one. The biggest U.S. crypto exchange just made its boldest move yet to stop being only a crypto exchange. On Tuesday, in its latest system update, Coinbase rolled out an SEC-registered AI investment advisor, stock and ETF trading on its professional platform, and options markets for both equities and crypto. That bundle pushes Coinbase deep into territory long held by traditional retail brokerages like Charles Schwab and Robinhood, and squarely into mainstream investing. The AI advisor can suggest, build, and help manage entire portfolios, while the new stock and options trading sit right alongside the crypto products users already hold. Coinbase is openly calling this the Everything Exchange, a single app for crypto, stocks, ETFs, options, and automated on-demand advice. Analysts say it pushes the company well beyond a cyclical crypto brokerage, and it is the clearest sign yet of the wall between crypto and traditional finance breaking down. The exchange you first knew for buying Bitcoin now wants to be the one place you trade absolutely everything. Ethereum is about to attempt one of its biggest capacity jumps yet, and it just cleared a major checkpoint on the way. The network's next major upgrade, nicknamed Glamsterdam, has entered its final test phase before a mainnet launch. Its headline goal is to roughly quadruple the block gas limit toward 200 million, the measure of how much computing work the network can process in each block. More gas per block means more transactions can fit, which can lower fees and ease the congestion that has plagued Ethereum during busy periods for years. Developers are now stress testing the change on a dedicated test network to make sure validators can safely handle the much heavier load. But critics warn that bigger blocks demand more powerful, more expensive hardware, which could push out smaller validators and gradually centralize the network. If it holds up in testing, everyday Ethereum users could soon feel noticeably cheaper fees and faster transactions across the board. Subscribe now.